Alrighty, so we've gone through the overall sort of high level trade plan. Well, in some detail, it's not super high level, but you guys got hopefully started to get the picture of what it is we're trying to do. So kind of before we dive into the actual liquidity concepts, it's probably useful to actually kind of roughly see what that plan looks like on an actual chart. Now, this isn't going to be that in depth. I'm not really kind of going to properly go through this in detail, but I kind of just want to show you loosely and quickly kind of what we're trying to do here. But we'll go into this in a lot more detailed walkthroughs and really dive into trade plans in later lessons. So for instance, let's kind of first look at an example if you're taking more of that swing trading approach. So you are going to be entering on 4-hour POIs with M15 timing, right? So this 4-hour range, I won't bother doing the daily analysis just for the sake of keeping it simple in time. And you would have, you'd be looking at the unmitigated POIs here. So we can see with the benefit of hindsight that one got swept and we just ended up rejecting the range. But that would generally be the idea, okay? So there'd be likely some 4-hour supply to the left. So after a break of structure, you would be looking for price to come into here, and then on a lower time frame on the M15, right, looking to see if we get those M15 entries to play the to play that 4-hour pullback, right? This was price action in the end of the year, so it's typically slow and corrective. But yeah, we then come down into the 4-hour POI. So at this moment, if we think there's a decent probability that this could be the move that continues, what do? We jump down to the M15 and look for your entry models, right? That's what you would do at that time. Okay, so we end up hitting a refined M15 level within here, right? So now you've done what? Now you have hit your medium time frame POI, right? You have the higher time frame objective potentially complete. We've had the daily pullback into 4-hour demand. So now you're looking for your lower time frame execution, which is your M15. Okay. Again, not going to get too caught up in entry models, but very quickly we get the mitigation, we get the shift in structure, we get the V-shaped reaction, right? You have the flip, react in there, and then we get the continued movement, right? And that would be your trade. Targeting to the upside. We're not going to get too caught up in management and things like that. Okay. Ends up not working, we come down a little bit lower. And where do we come into? We come into the 4-hour extreme. Okay, so now again, what do? As soon as price mitigates that level, our alert goes off, jump down to our execution time frame. Okay, and then you look for your lower time frame entry model. I'm not going to get into the details of it, but you can generally see, right, structure shifts in our favor down into the demand that caused it, and there's your trade. And now what you can do is potentially target all the way up to the week high, right? Because we've had the pullback to our POI, we've entered that POI with our lower time frame execution model. So now there's a high probability that pullback is now over, and now we can target the week high, right? That's the general idea of what we're doing. Now, of course, there's a lot of other stuff that can happen in between. We can look for continuations from within here. We can look for counter trend moves, but that's sort of the bread and butter stuff of what we're trying to do. Okay, sort of another brief example where again it gets a bit more complex, where we can get complex ranges, and especially if you're taking more of that day trading approach, where we have this 4-hour range here, right? Break of structure. We've come deeper into 4-hour supply, so we can look to play that swing pullback into 4-hour demand, right? To then potentially look for the move to go. So imagine this is our higher time frame. So when we're trading here, we would then follow the M15. We would look for the M15 to switch bearish, right? And we would look for that to stay bearish into the 4-hour POI. And then if markets were nice and easy, like sometimes they can be, but rarely are, price would then mitigate our higher time frame zone. Our medium time frame, the M15, would then switch bullish, right? And then we would hopefully follow the M15 strong lows until it takes out the high. But as you're about to see, it can get a little bit more tricky than that in reality. And then eventually we come in, and then that happens, and then eventually we go. Okay, so 4-hour would then be our higher time frame. So then if we drop down to the M15, again, I'm not going to go through this in exact detail now, but just to give you a rough idea of how markets can move, which I'm sure some of you are aware, right? We come into, or we get that break of structure. So down here is our M15 swing low. It's quite a big range. We get an internal pullback. We just change color of this. All right, we mitigate our extreme refined M15 POI within our 4-hour POI. Now, technically, at that time, you could drop down to your execution time frame, say the M5 or the M1, and look for entries. But probably with a lot of momentum and everything, it can just be best to be patient, right? In this instance, you could wait for an IBOS, right? So again, not going to go into too much detail, as tempting as it is, but we get a reaction from demand, we push up and we push down. So now we have a big flip. But more importantly, the structure is bearish, right? The internal structure for the M15. So now you have a strong high and you have a weak low, right? So price pulls back up, we can look to short. As soon as price comes into our M15 POI, drop down into the M1, right? And then from within here, there'll be M15 POIs that can form, and each time you can look for entries on the M1 to try and follow that order flow to do what? To target that weak low, right? Then we get another M15 boss, but where have we come into? We've come into a refined M15 POI within the 4-hour demand, right? So remember the higher time frame objective, it could have now pulled back, and now the 4-hour chart may be ready to make that higher high. So what do we expect? Then we expect that the M15 internal structure can potentially shift bullish, which is what ends up happening, right? So you can look for M1 entries from within here, right? And we get M1 entries within these POIs, right? All of these, there's little, order flow within here, M1 entry, right? Break of structure, M15 POI, M1 entry. Not saying you should take all of these or that high probability, that's what we'll get into, but it's the general idea of what we're doing, the direction and the order flow and the higher time frame philosophy of what it is. So then we get that bullish IBOS, right? So now the internal structure is aligned. This is now a strong low. We come into old supply. What is old supply? It should just be reaction points for pullbacks. So as soon as we have our medium time frame mitigation, our M15 POI, what can we do? We can jump into the M1 and look for shorts to play that pullback, right? Again, we can play this whole move. Look for shorts from within here. As soon as price comes in, jump in the M1. Now we come into demand near the strong low. Now what can we do? Now we can look for longs, right? Or wait for M15 to give a bullish chop. Come in here, look for longs on the M1. Come up, look for longs on the M1, right? As soon as we come back into that M15 POI, right? Then we take out the weak high and we pull back again into demand. Look for longs on the M1, right? Mess around, try to break the highs, sweep liquidity. We're at least expecting an M15 pullback now, right? Again, screw out. I know I'm going a little bit quick here, but I don't want to kind of get too stuck in the detail here. But again, we have that internal structure. We sweep, bearish structure here, M15 POI, jump in on the M1, come down, up to M15 POI, jump down to the M1. We're just playing the pullback. We'd expect that low to hold. It doesn't. Well, as we get into liquidity concepts, you'll see as we see all these sweeps, external range liquidity and all that fun stuff, we have reason to believe this low may now go, which it ends up doing. We now get a bearish IBOS, okay? So now this becomes a strong high. We look for price to pull back up into our M15 supply zones, jump into the M1, right? Look for shorts, price pulls back into M15 supply, jump into the M1, target the weak low. We get a break of the low, okay? But we're coming back down into 4-hour demand. So again, there's an increased probability the 4-hour could take over and we could switch bullish. The internal M15 internal structure does try to shift bullish. Old supply becomes reaction points for pullbacks. Again, we can look for shorts in the M1. Perhaps we can get long on the M1 here, right, to try and get the continuation. It ends up failing. We are in a big, messy range at this point. Again, not getting too lost in the detail. We then shift bearish again. So this then becomes technically a strong high. But where are we on the higher time frames? Remember, the higher time frame is king. We've now pulled, deeper into that 4-hour POI, right? Refine M15 within here. Look for M1 entries. Come in, flip M15 demand, look for M1 entries, right? You can even look to pay the short from within there, right? Depends on how active you want to get, right? Back into M15 demand, M1 entries, back into M15 demand, M1 entries, right? You could even be aggressive within this level, look for shorts from within here, demand holds, flip supply, back into here, look for M1 entries, right? It's not saying, again, none of this is, you shouldn't just be trading every M15 POI. There's going to be a lot to this, right? And this is a particularly advanced and tricky piece of price action. But it's just showing you the kind of, I'm trying to keep it to that kind of high level framework of higher time frame idea, right? Pull back into here. It doesn't always just happen smoothly and then we go. But that whole time, whilst that's in the back of my mind of what's going on, I'm trying to use the M15 structure as like sort of my immediate bias. So we're within this bearish range, kind of want to focus on shorts from supply. But that doesn't mean you can't look for longs from within here. It's just they might not be as high probability. Then when we get short from within here and we start moving down, target the weak low, right? Come into here, you can look for longs in case that's the movement, so on and so forth. So it's M15 ideas, M15 POIs, lower time frame execution, but being aware of the bigger picture of the higher time frame will more often than not help you to understand how the M15 or your medium time frame is going to behave. But yeah, we will really dive into all of that really slowly. Okay, I've deliberately kind of gone over this at a quick pace, but it's just so you can kind of, like I keep saying, have that kind of high level grasp of the general philosophy of what it is we're trying to do before we now go and dive deep into the source.